The Chancellor's budget has just landed, and if you're a Scottish business owner wondering how this affects you, this is a video for you. As we've seen with the previous budget, there was a lot of leaks leading up to this, and thankfully, as we hoped, the announcements on the day weren't quite as bad as what we expected. There's a few changes that are going to be impacting you and your employees over the next little while, and we want to take a couple of minutes to dive through some of the key points we picked up. The income tax bans have been frozen for a further 3 years. What this means for a lot of your team is that as time goes on and their wages increase in line with inflation as your business pays them that, much more of them will start to creep into higher and higher tax rates. Now, the freeze that was announced today relates to businesses in England and Wales. Scottish businesses will still be subject, or Scottish workers should I say, will still be subject to the Scottish budget, which is due in mid-January. Keep an eye out for that, for what that brings then. There's also an announcement today of a 2% increase to the rates on dividends, property and savings income. The dividend change kicks in from April 26 and that will be across the whole of the UK. Scotland, of course, is being subject to Westminster's rules on dividends and saving income. The property and savings rates will change by that 2 percentage points from April 27, with negotiations and discussions, happening between Holyrood and Westminster as to how Holyrood can enact that under the Scottish rules. Again, keep an eye out for the Scottish budget in mid-January to see how they propose bringing that in and when. One of the most positive changes that we saw today was the confirmation that the £1 million business property relief and agricultural property relief allowances for inheritance tax will be able to transfer between spouses from the 6th of April 26. Now, the government already announced that these new rules were going to be coming in. These assets were no longer wholly outside the estate or exempt, through these reliefs for inheritance tax. It was only going to be the first million and the first million per person. It's been the case for many years that when a spouse passes away and transfers their assets to the surviving spouse, that their nil rate band also transfers across, meaning that those assets don't get double taxed when the second spouse passes away. Thankfully, though, that £1 million allowance that they announced previously will also now be subject to the same rules. So for anybody who has a business that's, say, worth a couple of £1 million, when the first spouse passes away or has perhaps already passed away and the surviving spouse inherits all of that, that allowance also transfers to the inheriting spouse. So on the date of their death, they get the full £2 million allowance or whatever's left of it, depending on other transfers that may have happened. So that was a really nice one to see. They also announced a cap on the tax relief that would be available for salary sacrifices. Now, this only kicks in from April 2029, and there's going to be further legislation brought out to say exactly how this is going to be enacted. So we'll wait and keep an eye out on what they announce with that. I imagine there'll be a bit of consultation first as to how that exactly gets administered, but we've got a few years before that one's going to kick in. One of the more surprising ones was that disposals to employee ownership trusts, which is currently, or was until yesterday, completely tax exempt from capital gains tax. Disposals qualifying for that now are only exempt on the first 50% of the gain. So over that, you'll still have to consider business asset disposal relief or other capital gains taxes on that. So any transactions which weren't concluded prior to midnight last night will now be subject to that 50% restriction compared to the 100% relief that was available prior to this budget. And as we usually see, the minimum wage is also increasing, this time by 50p for those over 21, so going from £12.21 per hour to £12.71. Now, for anybody who employs somebody or many people on a minimum wage rate, that results in an extra just over £1,200 when you factor in the pension, the employer's national insurance, with effect from April next year. So again, when you're doing your forecasting for the year ahead and you're starting to understand the impact of that on your business, depending on your headcount and kind of, your mix of your team or anybody who maybe wasn't minimum rate previously but will be subject to the new minimum rate, it's worth factoring that in and considering it for your pricing strategy going forward to make sure that you are recouping those costs and able to, to pass on the wage correctly to the team without stripping away the underlying profits that your business needs. Now, the speech that we all see on TV always has all the big kind of headline grabbing points, but sometimes there's a bit more in the small print in the documents that the government releases on the website after the budget has been published. We've had a look through that, and there was a few little ones that we want to just kind of pick up. For any businesses which are not yet incorporated, There used to be an automatic claim to incorporation relief when you transferred your business from, say, a sole trade or a partnership into a limited company. That relief still exists, but that relief is no longer automatic. So now your accountant or advisor will need to make a claim to HMRC to claim that. That, again, we believe kicks in from April next year. Interestingly, there's also going to be a consultation in early 2026 about transactions between participators in close companies. What does that mean in plain language? Well, if you have a business where it's 5 or less of you involved in the ownership and control of that company, which most small companies are, and you perhaps pay yourself with a salary and a mix of dividends, as again many people do, then there may be some additional disclosures that the government's looking to bring in the future to understand a bit more about the transactions happening between the company and those who control it. So nothing confirmed yet, it's going out to consultation, but again, one that's worth keeping an eye on. And then, interestingly, with the cost of tax getting more expensive for a lot of the employees, it was good to see that there's some more tax relief going to be afforded to workplace benefits. They're going to be extending that to certain kind of pieces of work from home equipment, eye tests, and flu vaccinations. So again, stuff that maybe the employer would have covered some costs for the employee previously, but it would have been subject to income tax and national insurance. Those things going forward will become exempt from income tax and national insurance. So again, a nice way that employers can help their team out even more in a tax efficient way. And a few things that we didn't see. So corporation tax, the main rate, has stayed at 25%. There was no change to that. There were some changes to the writing down allowances for capital allowance purposes. They were restricting that from the current level of 18% down to 14%. So again, anybody that's got a pool of capital allowances carried forward, speak to your accountant to check if you do or not. That'll just slow down the period over which you get the relief for that. And I guess we have to ask the question about Section 455 tax. That's the tax that you might hear about on your director's loan account. Where that reaches an overdrawn position, that tax rate has typically followed the dividend tax rates. So with the announcement in the new dividend tax rates, we expect there'll be some changes to that too, to keep those two things in line. Thankfully as well, there were no changes to VAT, there was no changes to income tax rates itself, like we say, subject to the Scottish budget in January, and no changes to the the national insurance rates as well. They all stayed frozen. The main thing we saw was that freezing of the bands, which means that more folk do get caught by it as their salaries and wages naturally increase over time. And finally, on that one, business asset disposal relief stayed at the full £1 million, which it currently stands. We know that the effective rate of capital gains tax on qualifying disposals is going up from April next year anyway. There was no changes to that announcement. There was no changes to the rates that are going to be applied. So if you have a capital transaction that you're looking to conclude before then, we know now that you can proceed in the comfort knowing the rates that will apply, the business asset disposal relief that would be available on that. But it's worth kind of, again, speaking to your advisor and making sure that you're aware of the impact that will have on you and engaging with solicitors and anyone else that's going to be involved to make sure that gets over the line before those capital gains tax increases come in. And I guess that connects in the final point on that too. So with the increase in the capital gains tax rates for businesses, for trading asset disposals, we also know that those inheritance tax changes for business property relief and agricultural property relief do still kick in as planned from the 6th of April next year. So again, if you're doing any family planning, perhaps if you're doing some wider planning, to factor in trusts, again, the time kind of between now and the 5th of April next year is when you should be enacting some of that before some of these rules do change. So in summary, if you are based in Scotland, some of these rules definitely do still affect you, but we won't see the full impact of that until the Scottish Government delivers their budget in mid-January. So keep an eye out for that. We're going to understand how today's announcements feed into that and what impact that will have on all you Scottish businesses prior to the 5th of April and beyond next year. And of course, if you do have any questions on how this impacts you or your business, please reach out. We'll be more than happy to chat. Stick a comment below or just drop us a message and we'll be happy to run through any questions that you've got. Thanks, and we'll keep you posted on anything else that gets announced. Cheers.